What's up guys, it's Paul here from the 95 Investors Club channel. In this video I wanted to share an interesting strategy with you guys that I thought about pretty much this weekend. I haven't had a chance to try it out yet. I'm planning to try it out over the next week or over the next month with actual examples to show you how this works. But I wanted to share it with you in case you wanted to try it out as well and see how this works out, okay? And the strategy that I want to share with you is how you can trade Iron Condors in such a way that you're completely eliminating downside risk, or at least most of it, to minimize your losses, okay? So if you're not familiar with an Iron Condor is a strategy where, based on your technical analysis, you're expecting the stock to stay within a certain range, okay? So I have Corsair Gaming here. We saw that they recently had a double top and even more recently a double bottom, which seems like a trend reversal. So let's say you see that this is a pretty strong support here around $34. You expect that it can retest this double top resistance previously 43. It might break out and go back to all-time highs around 51. What you would do is you would wait for a bit of a confirmation that it is going to break out, and then you might consider getting an Iron Condor within this range if you want to be more aggressive, okay? So just for hypothetical numbers, the way you would do it is you might sell a short put of $40, which is slightly below this previous resistance, which we're expecting to become a support if it does break out. And on the top end, you're expecting it to be you want to sell a short call slightly above this previous resistance or all-time high of $52, okay? So as an example here, I'm selling the 55 call, and as part of the put credit spread and call credit spread, we are buying the $35 put that you see here, and on the top end you're buying a $60 call as part of the call credit spread, okay? And then the way this works is you'll get a credit of $331, and as long as Corsair stays between $40 and $55, you'll make a maximum profit, which is the initial credit of $331, and the maximum risk is if it goes above $60, which is your long call, or if it falls below $35, which is your long put, okay? And just as an example here, if it goes to $61, the way the math works out is, you would have to pay $500 to close the trade, but because you got an initial credit of $331, your maximum loss is $169, okay? So no matter what it is, the maximum risk you're taking is only $169, assuming you're just getting one Iron Condor. The thing is, we are trying to maximize the initial credit in such a way that we keep reducing this maximum risk, okay? Now typically, to maximize initial credit, what you would do is you will have to narrow down this range. So for example, instead of selling a 55 call, let's say I decide to go with the 50 call and buy the 55 call instead. Now I'll get a credit of $350 instead of $331, but now this range got tighter, which means you don't want Corsair to go above $50, okay? So that makes the range a lot tighter. It's more risky, even though the amount you're risking is only $150 compared to $169. So if you want to be even higher risk, you could sell a 145 call, buy the 50 call here, and this time you hit calculate, and you'll get $394, which is an even higher credit. Maximum risk is only $106, but now this range got even more tighter than before, and now you absolutely need the stock to stay between 40 and 45, okay? So that's not the right way to trade Iron Condors to minimize risk. In my opinion, a much better way to do it is, let's get back to our initial strike prices of 55 and 60. We saw that it was $331. So now what you would do is you would start by getting a put credit spread. Now if I do the math here on Robinhood, I would buy the 35 put, sell the 40 put to get a credit of $293, okay? Now what we want to do is we want the stock to appreciate so much that it tests this $43 resistance. Hopefully it breaks out, turns it into support, breaks out of here, and starts going back to all-time highs. And as it's getting closer to this high resistance or previous all-time highs, let's say the stock is at $48.50, we see that it is a resistance and it's starting to come down. That's when you want to go and buy the $60 call and sell the $55 call, okay? So it's almost like buying a separate put credit spread and a separate call credit spread, but essentially it will become an Iron Condor. You're just doing it in such a way that you get enough premium from each credit spread that the overall profit or overall credit that you get essentially wipes out your collateral or your maximum loss, okay? So right now, if you do the math here, if you got the call credit spread right now for $60, you're buying the call for 74, you're selling the 55 call for 112, so that's a credit of about $38. So let's say you did wait for it to appreciate all the way to $50. There is a good chance that this call will go from 74 to say $2, and this can go from 112 to say 375, just as an example. Okay, now you hit calculate here, and now you're getting a credit of $468, and your maximum risk is only $32. Okay, now your window is still the same. You still need it to be over 40. You still need it to be between the short put and short call. So you need it to be over 40, and you need it to be below 55, which was the same as before. But now your overall credit through the combination of a put credit spread and a call credit spread is $468, and your risk is only $32 if it went above 60 or falls below 35. Okay, so I think this is a pretty interesting strategy that I'm planning to implement myself. I haven't tested it yet. I may actually consider doing it on Corsair. I'm not sure yet, but this is definitely a strategy that I think you should add to your toolkit. I think it's going to work out really well if you give it enough time and you do your technical analysis properly. Okay, now having said that, I just want to share a couple of stocks that I'm watching for you guys. Obviously, I chose Corsair because I will be watching it tomorrow. I want to see if it can start running back up again. You know, we did see a double bottom that we saw here, which tends to be a trend reversal. I want to see it retest 43, potentially break out and go back to all-time highs. But even if you don't wait for it to actually break out, even a run up from 38 to 43 is a possibility if you want to get in and out quickly as a weekly trade. So watch out for that. But if this can break out of the resistance, turn it into a support and go back up, we may be able to see all-time highs again. Okay, so definitely watch Corsair at your watch list. We were watching Apple as well. I talked about Apple in my previous videos. It has been trading pretty much in this range. We just saw it break out of all-time highs on Friday. They do have earnings coming up. People are expecting their first $250 million quarter, which is incredible. Sorry, they're expecting their first $100 billion quarter, which is absolutely incredible. And even analysts are coming out with a price target of $150, which is crazy. But watch out for Apple to break out. If you're considering a weekly trade, I would recommend getting multiple calls, potentially sell half of them for a profit before earnings, so that you recover your initial investment and maybe hold the rest until after earnings if they do end up spiking. Okay, other than Apple, we also have TAN. I talked about TAN previously. I told you about how if it fills this gap here, let me go down to the 1 hour chart to make it easier to visualize. Yeah, I told you about how if it fills this gap here, then it would turn 107 into a support and start bouncing back. That's exactly what happened here. It's getting back to all-time highs here around 123, 124. I'd love to see that turn that into a support and break out through the resistance. There's a good chance it may bounce off, pull back a little bit. We may see a bit of a cup and handle formation before it starts breaking out. So definitely watch out for TAN as well. Same thing is happening with Sunrun. As you can see here, it's pretty much following what TAN is following. We are slowly starting to see it turn around as well. It may form a cup and handle and start breaking out as well. Chewy is another one that I'm pretty bullish on for the long term, but even Chewy is starting to form that cup and handle formation here. I want to see it break through this resistance and see if it can break out. It's just starting to turn around, so watch out for Chewy as well. I'm watching Facebook. Facebook also has earnings. They're still really far from all-time highs that you can see here. Their all-time highs was back in September around 300, 305. They're just starting to break out. They bounced off of the 200-day moving average. We are at the 50-day right now. We may turn this into a support and start moving back up. I'm expecting the earnings to be a good catalyst for them to start shooting back up. So definitely add Facebook to your watch list as well, okay? So that's all I wanted to share with you guys here today. A new interesting strategy that I think you should add to your watch list, as well as some stocks that I'm watching, not just for tomorrow, but even for this week. Even Amazon, actually, even though their earnings are not next week, I definitely want to see Amazon. They're still in that 3,300 range, still in this particular channel that I talked to you about before. I'd love to see it break through this particular resistance, and hopefully the earnings can cause them to break out of here and get back to all-time highs, okay? So that's all I wanted to share with you guys here today. Hope you enjoyed it. Be sure to smash the like button if you did. Leave a comment below if you have any questions, and subscribe and hit the notification bell if you haven't already, okay? Thanks again for watching, and until next time.